All right, good morning, everybody. Real quick, just want to do a little plug. We've been doing a lot of work on the website. And I know it seems like I keep saying the same thing, but I hear that Discord for the courses and next level library is supposed to be coming out soon. Soon. Someday. Keep saying it. Got a huge sale going on. And I think there always is a free trial. So if you are not a member and you just want to come check us out and you're thinking, you know, maybe it's worth a look, it definitely is worth a look. I was lucky and I found the bullish bears really early in my trading career when I didn't really know anything about anything. And I gave them a shot and I never looked back and I never left. It's one of the greatest communities for learning that is out there. Everybody's always so helpful and there's so many different styles of trading because when I was new, I didn't know what kind of trader I even wanted to be. So that diversity of trading styles really helped. And there's no other place like it. So if you haven't come over and checked us out, you should. The courses um, will prepare you for the material that I created in the next level library. And the stuff that's in the next level library, this isn't the stuff that you can just randomly find on the web. I developed this content specifically to hit on those key things like options trading and what strikes and what expiration, and not just what a butterfly is or an iron condor, but when to apply it, where, how to manage the trade when it's going wrong, live examples, live trades. You got to come check us out. So now that I got that shameless plug out of the way, let's see what's going on out there. We got Powell today. He's going to be on the Hill. A lot of the economic data coming in today is also going to be sentiment based. So this is that warm, fuzzy feeling that I joke about from time to time. When the market loses that warm, fuzzy feeling and dumps, or it finds it and rips like a mad demon, and you look around for news like, well, what happened? And there really isn't any. And it's sometimes hard to put your finger on why the market is doing a particular thing. Well, today with the economic events and with Powell, there could be a lull in the market where we just really aren't moving around until he's done, and he can spend, half the morning up there. There's been a lot of talk about the banks still being bullish in the equities, that there is a lot of room left, and it really comes down to trying to price in earnings, right? Companies have demonstrated that they can still make money in this environment. And as long as companies can continue to prove that, we're going to continue to go higher, no matter anything else, right? We can get the sharp pullbacks or whatever. We had a reasonably decent move in the overnight hours. Keep in mind that Powell talking at 10 o'clock is not the only person who's going to be out there today. Loretta is going to be chipping her teeth. And then the Kansas City president, George. You can see the Fed chair testifying on the Hill has a high impact expectation. Now, we always are expecting that, and then like 9 times out of 10, nothing happens. So it's very likely to be exactly like that. He's going to get up there and do his damnedest to not move the market. It's like Operation Don't Rock the Boat. We'll see how well he does. Nine o'clock, 10 o'clock, 11 o'clock, and 1 o'clock. The 1 o'clock is really important today. He'll be done on the hill. Um, these additional auctions at 11 and 1, sometimes at 11:32, they are game changers in the day. These are the kind of events that can kill a trend or galvanize us into a trend if we are not yet in one. So it's something to keep in mind. Really watch the clock today. Don't let lunch lull you into thinking that we're going to have a lunch, right? Normally, when we, like yesterday, we had a really nice trend. We got into the lunchtime, the trend paused and stopped. We looked for it to, um, break in its decision, and it broke back to the upside and ran it back up again. But it still paused for lunch. We may not get that pause today, right? So at 11 o'clock, just be ready for that. All right, so that was that flip that I was just talking about. We are still inside of yesterday's price action, but we're getting really close to finally getting out of it, right? When we start to zoom in, you can see we kind of winked outside the box and then came back inside of it. So we're still inside day. We're going to be looking for an inside day breakout, preferably in the regular trading session, but this may not wait, and it could just go ahead and get it done early. Price aggregates, and it's what we've been seeing, that megaphone pattern just kind of widening out, finding the liquidity. Reasonably decent news should have us challenging Friday's levels. I don't think we're asking too much for the market to stay giving us its average at the moment, right? And its average at the moment, the average daily range, ADR, is 1.3. Well, we're only at 0.3, so we still have a 1% package that we could add to this. Just use your drawing tool and add 1% and ask, well, what would that look like? That would put us around 47.25. So let's see what else we got. So that would be an upside move. 47.25 would have to deal with the COG line. That would be 47.11. The ADR of 1.3 is for a 12-hour or a 22-hour session, and we've already spent more than 12 hours of it, right? So we could make the move, but for that to happen, we're going to really need to get in gear, right? This thing is going to have to get off the bench, and we would see the sectors light up. So it won't be subtle. And when you think about what we're going to need, and then the idea that Powell's going to be up on the hill talking, it's really hard to see a path to this 1.3, right? Not at this point. The most we could hope for is a reasonably calm morning, and then he gets done. We get through the auction at lunch, and we make an afternoon move that's reasonably decent. That'd be about the most we could ask for out of this market today. But that's for the upside move. Alternate thesis. What if the market doesn't like what comes out this morning and we go in the other direction? Well, we will first deal with that structure that we built in the overnight hours, then the Globex low, and deal with yesterday's open institutional pivot point. Cog line at 46.11 and a major level at 4600, and then the low of yesterday. That's if the market really turns negative, and there's nothing on the books for that, right? It would have to be some new thing that pops up. So for that kind of move to the downside, we'd really expect us to have some follow through. Um, a new lockdown, something serious that comes along and brings us to that kind of move to the downside. Remember that bad news right now is good news and good news is bad news. So if the economic reports come out um, indicating that the Fed is on track and that they are right and that they should begin liftoff and tapering at a more aggressive rate, meaning good news. If good news comes out and validates what the Fed's been saying, that good news is not going to be taken well by the market. They're not going to like it and they're going to sell us off again. So kind of keep that in mind. Good news is bad news and bad news is good news. For the NASDAQ, um, something to keep in mind. I have this written here, but it's not just for the NASDAQ. In a volatile market environment, you're supposed to decrease your position size, use a wider stop, and then aim for larger targets in your profits. Right? And that way your risk reward still balances out kind of the same, right? You can't use those really tight stops in a market environment where we're just, getting 1 minute candles that are 75 points long. You're just going to get stopped out like crazy. But nobody wants to use bigger stops without also getting bigger profits, right? So the the general way of doing business in a high volatility environment is to reduce your position size and use a bigger stop, but also a bigger target. The problem is a lot of you newer traders, you're only using one or two contracts. Well, how are you supposed to reduce down beyond that, right? Well, the answer is basis point trading. Try doing a basis point trade. That'll take some of the heat off, or even don't forget there are options, and options can help take some of that heat off. Go in and put on a put spread and then go in and trade on the micros. That'll take some of the heat off. But generally speaking, in a high volatility environment, you're supposed to adjust. And I'm not seeing a lot of you adjust. When I've been looking through the chat, looking at the trades that you're doing, you're not adjusting your contracts, you're not adjusting your position size. You're acting like the market that we're in is the same market that we were in 6 weeks ago, 2 months ago. It's not. This is a way more violent environment. And if you don't adjust, you're just going to continue to get stopped out. And you're trying to save a dollar. I get it. You don't want a big loss, a big stop. But if you don't participate in risk, you don't put risk on the table, you're never going to get any reward, right? That's just all there is to it. Unless you accidentally get lucky. And luck isn't a really good trade strategy. For the NASDAQ, same kind of moves as yesterday when talking about where we headed. We want to get outside of yesterday's price action, which the ES had not yet managed to close outside of it. And here we are on the NASDAQ. We did manage to get outside of yesterday's price action. So we are on inside day breakout. The next focus is going to be that 15.8 area. That'll put us around the middle of this junk. So we're going to be focusing on that for the next leg up. We have the legs to make it to the top of that. We've got a 2% ADR, and we're not even up a 0.5% yet. So we could hit the top of that range from Thursday, but it would take a lot of push to get us there. You know what I mean? Like, it's not going to be subtle if we start making a move like that. Everything is going to light up. And as you can see in the sectors, I mean, we've got some stuff moving around, but if the benchmark is a 0.5%, A lot of these aren't there, right? Remember the two main ones, finance and technology. We can have a good day with finance, and we could have a good day with tech, but you get tech and finance, and we're going to have a really good day, right? So we want to see that kind of follow through. So that's the positive move to the upside. The downside would be first getting through our own Globex low. You could even make the argument, just like on the ES, that we have to get through the structure on the top side, then the ES low, then maybe the Globex low of yesterday, which is basically Sunday night, the open, and the low, hitting every branch on the way down, right? When you're falling out of the tree. At the moment, we're not poised for a negative move like that. Again, it would be news based that would drive us to such a positioning. We are looking for a trend line breakover today. It's the same trend line breakover or moving average breakover that we traded yesterday, just on a higher time frame. We hit the edge of the expected move yesterday, by the way. Not in the ES, but we hit it in the NASDAQ. And if you go to the SPX, we hit it. If you go to SPY, QQQ, we hit it on all those, just not the ES futures. So we did make the entire week's move yesterday already. We're got that done. Now what? So we're going to be looking for a moving average cross. I like the 30. There's nothing wrong with the 1 hour either. 15-minute, right? If you do the same ones all the time, if you're on that same time frame all the time, you'll know the cross you're looking for. You can trade that cross on every single time frame. We were trading it yesterday on the 5. We're done now. We're done with the 5. We're done with the 15. Well, to a point, because we're back underneath it. So the opportunity is there for another cross up. Trade it if you got it, right? So that deals with the ES and the NASDAQ. Bring in the grid, as we always do when we're looking at the markets and we're trying to ask what the heck is going on. 9 times out of 10, it is either directly connected to the news or it is directly connected to what's happening in the dollar and the bonds. The dollar opens at 8. The bonds open at 8:30. Let these early warning indicators point you into what's going on in the market. And should they make sudden and drastic moves, pay attention to them. They're going to offer you a heads up. They're going to warn you of imminent threat. They'll help you with your position, help confirm that the move that you think you're seeing is actually following through. They help, right? Even if you don't quite know what it means when you start to see the dollar roll over and dump like a mad demon, at the very least, it's warning you, hey, heads up, watch out, something is going on over here. It may be that last little bit that helps you decide to lock in gains and get out, or to pull the trigger as we're going through that resistance level. We did back off in the VIX. Very nice yesterday. That was a very, very clear indication that the rally was straight full on yesterday, right? When we started coming up off of that low and the VIX started to confirm with conviction, that's when we sized up, right? It was right on that break below that line. That's when we really sized up. And why not, right? I mean, this thing was screaming, "You're right. Do it." Keep your eye on this thing today. Make sure that it doesn't start moving like the dollar again, as I discussed yesterday in the morning briefing. And again, price aggregates. That megaphone pattern again and again and again. All right, we widened out the sector list a little bit. We started adding the IY series. So we've been using the XL series. We now have the IY series. It's the iShares company. Go over and check out their website if you want to know a little bit more about them. I like the XLs. There's absolutely nothing wrong with the XLs, right? XLK, XLY. That's the SPDRS company, which also has a really amazing website. They're both good. There's nothing wrong with either one of them, right? But their weight and what in the ETF that we're looking at are slightly different, right? And so it's just adding, a little bit more perspective. You always want to know what ETF you're looking at. Where did it come from? Who makes it? How often do they rebalance it? You know, is it being run by a particular individual, and how is his track record of doing things? Know what you're messing with, right? Just randomly put some symbol on there for your sectors. Energy and finance has continued to stay correlated. We want to use that to our advantage right now. Not slacking off in that pressure at all. Emerging markets is up almost 1% this morning. This is a risk on gauge. A global risk on gauge. Kind of asking the question, where is the world markets in their sentiment? They're bullish. They're risk on. Airlines are moving around a little bit this morning, looking pretty good, trying to get back above that 50 with conviction. We keep just crisscrossing back and forth the 50 on the daily. Remember, it's not just the idea that it's a beat down sector that has a lot of room to the upside, which is true. It is. But it's not just that. You have to think about how much money it costs them to borrow money. And all the companies borrow money. If these guys have to borrow money at a higher rate, then it cuts into their earnings. And the airlines and the cruise lines and these guys, they're not really known for being great at money management to begin with, right? When it comes to best practices and business practices, the airlines are just known for waste, abuse. They're always getting in trouble. So the airlines, yeah, they're off their highs. They have the potential for amazing rebound, but if you think you're just going to get some 3 month or 6 month windfall, uh, you could. You mean look at the rally that we had back here. You could, but it's very likely to see the kind of recovery that you want. That you could be sitting in this for a lot longer than you want, right? And if you're going to give it to your kids 30 years from now, shoot, who cares, right? Go ahead and buy some up. I'm sure that they will benefit from it. But that's getting more onto the investment side and not so much on the trade side, right? You know what I mean? Like that should be the perspective. So I see a little bit of chat that someone seems to be a little confused. The Bullish Bears live stream starts at the trading session. So around 9:15, there'll be a Zoom link, and you can click on that Zoom link and join it, and there will be the live session during regular trading hours. This is just the morning briefing. This morning briefing starts every morning at 7:30. Every morning. All right, so airlines, emerging markets, energy, precious metals moving around a little bit. We've got tech, right? I added BITO yesterday. This is that new Bitcoin ETF. And you can see how new it is. There's just really not a lot there yet. Um, so many people don't have a digital broker, right? Like they don't have Coinbase or some platform where they can trade Bitcoin. They probably do have it. They just don't realize it because you can trade it on your PayPal if you wanted to. And it's been a long time since I met someone who didn't have a PayPal account. But This new Bitcoin ETF is also what we're using as a benchmark, right? Just like in the other sectors where we have our ETFs, IVB, SPY, GLD, right? It's what they represent. The rest of these that are not even up a half of a percent, we don't pay much attention to them at this point. They have to do better than that. What's not in this list are things like the EV market, right? We really don't have an EV ETF. So you want to make sure you go over and, look at a collection of EV names. They're doing reasonably well this morning. Most of them are slightly positive or doing, you know, more than a half of a percent. Looks like we could be getting a few red to greens over there. Maybe worth checking out. Tesla ran into the close. It was a pretty phenomenal move yesterday. A lot of flow going into the close. You can also see on that list, even GM and Ford are slightly up this morning. When we can't lean on the sectors, we most definitely want to lean on our scanners. This watch list is companies with weekly options. Companies earn the right to have weekly options. They earn it through liquidity. So if you're trying to decide, is this liquid enough to trade? Well, if it doesn't even have weekly options, then it's probably not liquid enough. Even if it does have weeklies, it doesn't necessarily mean it's liquid enough, but it does mean that it was at least liquid enough to earn weeklies, right? That's kind of a good start. So it's an easy way to kind of filter down the options list of things that you may want to trade. For me, if it doesn't have weeklies, I got to have a really, really good reason to trade it. And usually it's going to be some kind of underwrite, right? Like I'm going to be doing some kind of wheel or maybe, the covered puts, trying to get stock so that I can run the wheel strategy, maybe a jade lizard. So if it doesn't have weeklies, I'm going to be readjusting the sound quite a bit, right? The trade, not the sound. I'm seeing this guy really have an issue with sound over there. It seems to be just one guy. I don't know what's wrong with his system, but nobody else seems to have sound issues. All right, so we want to start with the S&P 500. We need to filter this thing, pre-market change percent, and then use the filter. We don't want 500 names. We want to knock it down to around 100 names, right? And that can sometimes be tricky. Just keep trying it a few times. I got it down to 95. That's close enough. Now we got to adjust the color scheme, right? We got a lot of gray in there, even though they're up, near a half of a percent. To do that, want to just go in and hit where it says 1x. We're moving it from a 3.0 to a zero point 0.3, right? That's the only thing we're doing. We're just changing how soon the color is applied. That's it, right? And once we do that, we can really see at a glance what's going on in the S&P. We want to look at this not as an individual name like, oh, Apple's moving, Amazon's moving, Tesla's moving. It's what sector, what subsector, what industry, what peer group is moving. Visa, MasterCard, Wells Fargo. Okay, I keep seeing a couple of those credit card names this morning. But notice it's not all banks, right? When we say finance, well, what kind of finance? Credit cards, lending institutions, right? If you just say finance, you're really vague and missing out on the nuance of what finance is making moves this morning. Change this one to the NASDAQ 100. Drop it down to pre-market change percent. We don't need a filter because it's already 100 names, but we do want to change the color scheme. That way it just responds quicker, right? And again, you can see we got a lot of green. There is red out there. MU and Intel had some news, right? That CFO changed companies. So they're not really represent chip sector per se, because you can see Nvidia and Texas Instruments and AMD is doing really good. It's just MU, right? So when we get into the screener, TradingView doesn't allow us to scan our own watch list. So we got to kind of make do with what we can scan. I've got these set for the S&P 100 and the NASDAQ 100. And generally speaking, I want to come in and ask the question, how bullish are we this morning? 0.5% is kind of my line in the sand. How many names in the S&P are up at least 0.5%, or down at least 0.5%? Well, we can see the down from all that green. It tells us we shouldn't be looking to the downside. Let's look to the upside. So we go to the S&P, 0.5%, 23 names. We'll just round up. 25 names are up more than 0.5%. So 25% of the S&P is up this morning, 0.5%. That's not too bad. It's not overly bullish, right? We don't have like bullish exuberance, but it's not bad. 31 out of 100 names in the NASDAQ are up this morning, 0.5%. That also isn't too bad, right? That's 31% of the NASDAQ is up this morning. So when you're looking at these names, you really want to try to identify um, their grouping, their peers, right? Because it's not just that one name that you want to try to focus on. It's where should I be looking as we come into the open? Which of these has a daily chart set up that is going to give me more encouragement for an intraday play? A red to green trend line breakover, inside day breakout, gap close, right? Some higher time frame reason to put it on our watch list, because otherwise we're just going to end up with this huge watch list at the open with too many names just to monitor, and then we don't get any of them traded, right? It's just too much. Pushing it to the edges of the envelope, how many names are up at least 1% this morning? 12 names in the NASDAQ are up at least 1% this morning. These are the most aggressive movers, and oftentimes they're yesterday's biggest losers, right? You get that big move to the downside yesterday, then a red to green in the overnight hours with a real positive gap up at the open. 1% move, it's already moved a long ways, but there is the momentum plays where we buy high, sell higher. Completely different than the trend trades where we buy low, sell high. In momentum plays, you're expecting the continuation of that push. Bring it over to the S&P, only 6 names. There is the distinction that needs to be made. The NASDAQ 100 does not have financials in it. The S&P does. And I'm not seeing financials in there, right? There is some energy names, and energy's been a really good play in the last few weeks. Don't get caught off sides. So that is a wrap, everybody. Be careful. Have a good day, and I will see you all.